Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. A lot to talk about with the market. It just keeps heating up. Summer's here. Temps are going up. So is the stock market. Dow Jones up 1.3% this week. S&P up another 1.5%. Look at that. Year-to-date S&P at 8.6%. So, yeah, at the beginning of the year, I was saying if we get 6-7%, I'd be happy. Well, I'm real happy now, of course. That's great. Got our mojo back. NASDAQ up 9.3. Remember, it was down over 20? The MSCI index, still the leader, up 20% year-to-date, up 2.8% for the week. So that was good international exposure there. 10-year, right at 438, holding flat this week. And oil down a little bit at $65 a barrel. So stocks keep hitting fresh highs. This is supported by the trade optimism, solid corporate earnings, and some new trade deals that limit the uncertainty. So that's been what's going on there. We always like to look at the signals to see if this is going to be a hard or soft landing. We do that once a month, so let me get into that for the moment here. There is no significant signs right now of the economy slowing down. Yes, it's I don't want to use the word grinding because that's a wrong word. It is, you're taking your foot a little bit off the gas, but it's still on there. We're still moving forward. And I look at things like the manufacturing index, the services index, all those things are pointing to positive overall. They're all in the area I'd like to see. The only area where there's a little bit of slowdown is manufacturing. Came in at 49. 50, remember, anything above 50 is good. That means growth. 49 is not bad. So a month ago, we were at 40.5. If it was staying there for the next couple of months, then that would be traditionally a recession. We talked about that. But it's gone back up. So it's a 49 now. That's good. So no hard landing in sight at this point when you look at the services index or the producer price index, any of that all looks good. The consumer's still resilient right now. This past month, retail sales, get this, $621 billion. So that was up from a month ago and again up from previously. So that's all very, very good. And even with the tariff threat out there, the consumer is still spending. And if you go out, you see it. I was out last night and it's crazy. All the restaurants, all the streets, everything's going. People are out. They're doing things, and that's great. So what would signal a hard landing? Well, that would start to roll over, and you'd see a slowdown. You wouldn't see so much activity. And, of course, the numbers would go down. We're not seeing that. It's not happening. So if we don't see that within the next 3 months, all good. Business spending is still slowly growing. And when it comes to employment, the labor market is still resilient in the face of the Doge and the federal reductions. Hasn't really mattered. So the labor market's not deteriorating. That's good. So bottom line overall, the economy is still positive. All right. So with that, this next week, we've got a packed week coming. We got the Fed meeting. So we're going to hear what they're going to talk about. Maybe they'll signal September as a lowering. Maybe they won't. We've got some economic data coming out, which will be important. We've got the rate pressure. It's intensifying, whether or not, I mean, you saw the arguments this week, right? They were sitting there at the building talking about the overspend or whatever, and Powell was saying no and shaking his head, and Trump, yeah, I mean, these two were just kind of going at it. I'm sure you saw that. Doesn't help anything. What about meme stocks? Well, we're going to talk a little about that right now because meme stocks and speculative froth is back. It's coming back again. And that always is a signal that euphoria may be a little overdone and the market could be starting to top out. That's what that means. So think about summer heat and things getting out of control a little bit. Values elevated. Earnings have to be there to lift these things. Got to have lower rates. So how do you look at this? Well, the bottom line is the volatility is a risk, of course, especially as we get into the September, October time. The overall clarity in the economy is good, like I'm saying. So that's good. Better than it was a month ago. And right now the trend is up. And so tactical pullbacks, if they happen, that should be your opportunity, in my view, especially if rate cuts become more known and when, that I would recommend you don't chase speculative things, even though they're tempting. If you're looking for income, I still like the 7 to 10 year investment high quality things out there. You can get some nice yields, 5% plus. They're all around, and fixed income, annuities. You're looking at corporate bonds, high quality. It's there. There's good things to see. Still seeing that. So overall, it's good. Now, what about stablecoin? We got to talk about that because I know you're probably wondering, what is that? What does it mean? This past week was huge for the crypto economy. Bitcoin set a new all-time high of 123,000. The total crypto market topped, get this, $4 trillion for the first time. And crypto investment products saw inflows of $4.39 billion. This was the highest weekly figure ever recorded. All these breakthroughs took place during Crypto Week. It was an entire week dedicated to crypto legislation by lawmakers. You had the House pass 3 bills: the Genius Act, we talked about that last week, the Clarity Act, and the anti-CBDC. I had to read that a few times. Are we talking about CBC? No CBD, CBDC, Surveillance State Act. The Genius Act established unified standards for stable coin issue and reserve. Clarity defines SEC and CFTC oversight for digital assets. And the anti-CBDC Surveillance State Act prohibits the Fed from issuing a centralized digital dollar without congressional approval, promoting decentralized solutions. What's stablecoins? Stablecoins are a type of cryptocurrency designed to maintain a stable value by being pegged to a reserve asset like the dollar, gold, physical things. They've become popular due to their price stability, flexibility, low cost, and speed. And now you've got some regulatory approval too. Here's a quote from Bitwise CIO Matt Hogan. Quote, "Stablecoins have emerged as crypto's second killer app after Bitcoin. Over the past 5 years, stablecoin AUM has grown from just over $4 billion to, get this, $250 billion. And the U.S. Treasury Department projects they could top $2 trillion by 2030. It's hard to find another industry where the government's base case is 700% growth in the next 5 years." End quote. So that's a little bit about what stablecoins are. So when you get that question, now you know, and if you're thinking about it, see if it's pegged to something. Because I know there's these memes out there trading like it's gambling. You got cats and dogs and all these things and pictures of people with dogs. It's just crazy. That's not the same. So figure out what you're doing and what you're investing in and look at it if you're going to get into this at all. And be careful because it is new. It is interesting. And the bottom line is stablecoins represent a potentially significant step forward in the continued acceptance of crypto-related financial instruments. And while this isn't going to be appropriate for anybody and everybody, of course, there might be some of you who think it might be, and it might be interesting. And so just continue to look at the legislative progress, what happens, and the industry as a whole, and realize that Bitcoin and Ethereum are usually the preferred stablecoin out there when you're looking at this sort of a thing as it becomes more broadly accepted.
You can hear the Protect Your Assets market briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets market briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.